Hey there, and welcome to today's daily premium newsletter for March 12th. So this is the second week in a row that we've had a positive Sunday followed by a dump on a Monday. While there may be a few outliers that we could point to regarding the dump, the primary culprit to us is the continued lack of volume. We nearly broke into the 12 billion USD per day range, which is equivalent to the volume we were seeing in late November, as well as the total market cap. Even with that said, there are a few bullish stories to discuss today. First, the crypto community is celebrating that the Japanese Mt. Gox trustee will no longer be selling his large amount of Bitcoin or Bitcoin Cash until September at the latest. While we were adamant that his total sales of the 35,000 Bitcoin over the past 3 months has had an insignificant impact on the market mentality is very susceptible to the notion of whales controlling the price. What's compelling to us is that during the dip over the past 3 months, it's not important who is selling Bitcoin, it's more important to know who's buying. According to the data collected from bitinfocharts.com, most of the 100 richest Bitcoin addresses haven't lost any money during the last 65% dip. In fact, their stacks of Bitcoin increased exponentially. What's interesting is that if you hold more than 0.153 Bitcoin, you're in the top 30% of all Bitcoin holders. And if you have more than 15 Bitcoin, you're in the top 1%. So one of the consequences of this bear market is that the top Bitcoin holders have increased their stacks, and as the saying goes, the rich get richer. But that's not the only story here. It's very likely that the same pattern has happened with every other major cryptocurrency. The top holders of Ethereum and Neo and Litecoin and Monero and all the others all saw this as an opportunity and used it as a chance to increase their holdings because they know that the market is just as likely to retest previous highs than to languish into obscurity. One of the best ways that this will occur is a return of public awareness and an increase in public understanding. While retail investors will certainly follow institutional investors, should the government clear the way for them, people who have never invested before were interested in Bitcoin and crypto back in December, and that was a very remarkable occurrence. As an example of increased public awareness, yesterday we saw HBO's Last Week Tonight feature cryptocurrencies as their main story. In it, John Oliver, the host, was able to provide a rather succinct, if somewhat shallow, description of cryptocurrencies and the current investment landscape. He was quick to point out that the technology has promise, but examples such as BitConnect and EOS warrant responsibility in your decision making. While we disagree with his assessment that investing in cryptocurrencies is not investing but strictly gambling, there were many good points he made, and he did a good job of towing the line between bullish and bearish. Most importantly, Oliver's audience is nationwide and worldwide and will no doubt bring renewed interest into this space. Moving along, one of our favorite fiat to crypto exchanges, Gemini, is looking to add Litecoin and Bitcoin Cash. Headed by the Winklevoss twins of Facebook fame, they claim that the most obvious additions to their roster of offerings are from the Satoshi Nakamoto family tree, namely Bitcoin Cash and Litecoin. What's interesting is this is not only a good move for the Coinbase alternative, but has implications for its partner in Bitcoin futures, the CBOE Global Markets Incorporated, which is interested in adding additional futures contracts for cryptocurrencies, but will need Gemini's assistance to accomplish this. The Winklevi also made comments applauding last week's moves by the SEC regarding US-based cryptocurrency exchanges and how they must register in order to remain in good standing with the law. Both Gemini and Coinbase are located within the US and are many times more secure than previous iterations of cryptocurrency exchanges, such as the infamous Mt. Gox. Both Gemini and Coinbase have FDIC insurance, which will cover your investment up to $250,000 if you are a US citizen. So last up for today is the announcement that South Korean officials will once again allow the use of ICOs with new regulations. While not official yet, what will likely change is that ICOs will involve local banks, the Justice and Finance Ministries, and the tax agency to create transparency. While the regulation will need to be fleshed out, we believe this is another indicator that South Korea is becoming one of the most forward-thinking and crypto-friendly nations in the developed world. It's our hope that the example they set is a model for other countries looking to regulate cryptocurrency in the future in a responsible way. So with that, I'll turn it over to Doc. Have a great week, everyone.
Good evening, folks. It's Doc with ReadySetCrypto looking at a chart here of Bitcoin on the daily chart. Looks like we might be seeing a little bit of a flag setting up here, a little bit of a bear flag setting down. So again, I'm not going to spend too much time going through the top 10 tonight or any of the altcoins. It really doesn't make that much difference as long as the big dog is under pressure right now. What we can see from this, though, as we get into this consolidation action, so you're seeing candles going down, up, those kind of things. So sometimes what helps is to go down to, in this case, maybe like a 1 hour chart. So going to a 1 hour chart, now we can start to see what's happening with this we have a little bit better view. And what I'm seeing so far has been consistent with what I consider to be a short-term flag pattern. So this is a bearish flag pattern. This is where we have very slight higher highs, higher lows, higher highs, higher lows. These are very slight. This is not like a reversal. A true reversal, something like what we saw back in the early February timeframe, was you saw price going down like this, and then you saw a huge reversal from there on a smaller time frame. So dramatic higher highs and higher lows setting up. But this is more of a flag pattern. Now, normally flags set up as somewhat of a halfway house in between the initial point and the objective. So you have your initial swing down here, you have your flag setting up for however that happens, and then that's about halfway to the eventual target. So the eventual target could be either, again, this trend line or maybe 6,000, or what I'm sort of hoping for is a little bit of an undercut. We need that panic. We need that volume. We need the capitulation. We need people to basically give up and say, that's it, I quit. And after that, we will see a stealth rally show up from here, and nobody will believe it until it doubles and triples from the bottom. Again, those of you looking to swing trade Bitcoin or any other coin right now, probably the best advice that I could give to you is look for extremes and look for descending patterns breaking to the upside. So again, remember that if you're trading an overall pattern heading down, you are counter trend trading. You're counter trend trading. You're looking to catch the falling knife. And so probably the best way to confirm a safe way to do that, let's go with a different color here. The best way to do confirmation for a better entry is look for the price going down below the Bollinger Band. So in other words, I'm looking at a 30-minute chart here. So that will flag and say, okay, check, I've got the flag, I've got some extremes here. But until you see, and there's another flag there, until you see the price actually going through a trend line like this, this is where we built up enough pressure that you will get some decent movement to the upside. So to me, that's the best way to handle something like this. I see moves like this, and the payoff is just not there. The payoff is just not there until you have an extended, deeper move, and perhaps even one where you could count in the choppiness index and look for exhaustion to the downside. That will also help, because you want that oversold pressure blowing off to the upside and covering. So look for patterns that are extended to the downside, that flag the price going below a Bollinger Band, and then break above a descending trend line. Remember, again, just like everything else in Newtonian physics, descending patterns eventually have to break to the upside. So put that in your favor. Now, don't forget that the converse is true as long as we're in a primary downtrend, that the subsequent rising pattern that comes out of this will eventually break to the downside as well. So until we have a better set of derivatives for Bitcoin or other crypto assets that are out there, so until we get options that are liquid, until we get futures contracts that are tradable for the retail trader, we're going to have to be stuck with going long from these. We really don't want to be going short on these moves. Okay, guys, that is it for today's report. Thanks for listening. See you tomorrow.